How do you make millions in profits, send tens of millions more offshore and pay only €250 in tax to the Irish Revenue Commissioners? Well, that's what it appears several so-called vulture funds have been doing in what's been described by our next guest as a masterclass in tax avoidance. The Department of Finance and the Revenue Commissioners are now looking into the practice to see if a legal loophole is being abused and if changes need to be made. One of those who's expressed concerns about it is Stephen Donnelly, joint leader of the Social Democrats, and he joins me now. Stephen, can you explain in simple terms what's going on here?
Good morning. Yeah. So what seems to be happening with some of the so-called vulture funds is they're using something called Section 110 status. And in some cases they're using Irish Charities as well as part of a mechanism to avoid paying taxes in Ireland, a completely legal mechanism, but it was brought in 1997 to help the IFSC attract what's called securitisation business into the country. And the thinking was this: if you're a global firm and you're making your money all over the world, you're making profits all over the world, but you're bringing the money into Ireland to have it managed, then it would not be reasonable for the Irish state to charge you 30% tax. So there's 12.5% corporation tax, and then you pay withholding tax. Now, Section 110 was set up sort of like a giant loophole. The law was not written to specify this type of industry, but not the following type of industry. It was set up with pretty broad parameters, and the idea was that it would be policed. Now, what has happened over the last few years is firms that have come into Ireland and are buying loan books from NAMA or IBRC or even the commercial banks, they're establishing themselves as Section 110. I gave the example of Mars Capital in the Dáil, which is owned by a children's charity called the Matheson Foundation. And by using Section 110, and in some cases Irish Charities, what they're able to do is offshore the profits. So what you can do is you can set up a fund abroad. It lends the Irish company some money. The interest rate is hiked up to basically suck out all of the money that would have been declared in Ireland as profit. So that's what's going on. I think it's very important we understand the quantum of this. The reporting yesterday in the papers was very good, but it's talking about tens of millions and hundreds of millions. The quantum we're talking about in terms of lost taxes to the state is probably billions. I think conservatively it could be $1 billion a year, maybe $2 billion a year for the next 10 years or so. So what we're looking at is perfectly legal tax avoidance on a scale that the Irish state has really never seen before. And why this is different is because it's tax avoidance on profits made in Ireland. So if you run a pub or a shop or a small business or indeed a large business anywhere in Ireland, on profits you make in Ireland, you pay taxes on them. But
don't these funds pay some level of tax?
Well, the accounts I've looked at, they seem to be paying about €250 a year. So Mars Capital is the one that I referenced in the Dáil. In its year one accounts, it has about 14 million in revenue. It does have real costs against that, obviously paying back loans to Citibank and so forth. But they declared exactly €1,000 in corporation tax, which is then taxed at 25% for the Section 110s. And as I looked through more of the so-called vulture funds, it turns out that more than one of them are paying exactly €250 a year in corporation tax. So based on the accounts I've seen, there's very, very little tax being paid. So really there needs to be a full investigation into this. The government, I don't believe, has gone half far enough. They've said, look, the Revenue and Department of Finance are looking into this. But this has been going on for several years, and there's very few firms have bought most of the assets from NAMA and IBRC. Lone Star, I'm told, have bought about a third. Cerberus, Goldman, Carval, Deutsche, Oaktree, and then there's some smaller ones. There's very few firms in total that have bought most of these assets. So my hope is that Revenue and Finance are looking at this. But it's been going on for years. Now, in response to questions I tabled last week, the government essentially said, no, we don't know anything about this, and NAMA doesn't know anything about it. Department of Finance doesn't know anything about it. If that's true, personally I find that very hard to believe, but if that is true, then it suggests a very worrying level of incompetence in government that this level of tax avoidance could go on without them knowing about it. And if it's not true, if it is the case that the accountants and the lawyers representing these firms have been in touch with arms of the state to say, look, my client is going to be bringing €2 billion into the country. We want to set ourselves up as a Section 110. This is going to be on Irish profits as opposed to the way it's been done previously. Are you okay with that? If that is the case, then we're looking at a very serious level of complicity in this tax avoidance.
And if the system is being abused, what should happen then?
Well, it needs to be shut down right away. So we don't know, we don't have exact numbers on the scale of this, which is why we need an investigation. But if we assume that there is €1 billion a year being lost in taxes, then we're talking €20 million a week. So what we absolutely cannot have is a probe by the Department of Finance that goes on for a few years, at which point the so-called vultures are looking at getting out of the country, and we lose all of these taxes. It has to be done very quickly, and I'm told it can be done very quickly. There's two quite simple things that could be done that would go a long way to shutting this down. The first thing is that the charity regulator, because remember, Irish charities are being used as part of the mechanism, the charity regulator should be instructed immediately to contact all charities and say, if you are holding shares in companies that have nothing to do with your charity, you must divest yourself of those shares immediately or you will lose charity status. And then I believe the revenue, once that's done, should issue a bulletin stating that for Section 110 companies, if their sole business or if the vast amount of their business is on economic activity in the Republic. In other words, if you are a company in Ireland making profits based on economic activity in Ireland, and if you use Section 110 status to offshore those profits, then we will no longer consider it tax avoidance, we will consider it tax evasion. Now, I want to be clear, I'm not stating that it is tax evasion. I think these firms should be told that going forward, it will be viewed as tax evasion, and of course they will comply with the law, I would imagine, and they would stop. There would be a huge potential boon to the Exchequer.
OK, Stephen Donnelly of the Social Democrats, thanks for joining us.